What's going on, guys? I know we have a lot of new faces on this call. My name is Matthew Cruz. Been involved with IM full-time for 4+ years, chairman 10. It's been absolutely life-changing. And guys, my job today is just to open up this call. And what I remember when I got started back in 2018, that's when I got started within the academy. And at first, the first few months, I learned a lot from Chris Derrick. I learned a lot about price trap, and that was my first any type of having any kind of trading success at all whatsoever. And that was an amazing strategy. And what worked for me in the beginning kind of stopped working for me for a little bit. And around a few months in is when I got introduced to this individual that you guys are going to hear from right now. And I got to hop on a call. It was me and Kiani both were still learning how to trade. It was our first few months, right? It was also John was on the call, and there's one other person on the call. And I believe Mike was in Puerto Rico, and he was just breaking down the charts. I was having paradigm shifts, and he is a huge, huge reason that has allowed me to get from where I was to where it is that I am. And also, I know that he has thousands and thousands of hours of Go Live education. I believe that with his English and Spanish sessions, that this individual has more live sessions, more hours than any other educator that there is. He's somebody that I trust. He's somebody who is a friend. He's somebody who we also have fun together. We were literally just jet skiing together the other day. And I'm telling you guys that he is the GOAT on the charts. Between him and a few other people, I've definitely studied them on Go Live more than anybody else. So you guys want to make sure that you guys are paying very close attention over the next 20, 25, 30 minutes where Mike's going to be breaking down the charts and some setups for the entire week. So with that being said, Mike, I'm going to pass it over to you, boss. Take it away.
All right, what's up, guys? What's good? I'm co-host Perfect. Yo, let's give it back to my boy here. Next chairman 25. Next, I'm gonna just take him there and just next 7-figure trader. Here we build cash flow, right? Here we're looking to have multiple income streams. So we really have a place of abundance here. And I want to give it back to Cruiser here because he's really somebody who walks it like he talks it. Crazy consistent and probably one of the most coachable people I know, which is obviously not a surprise, just considering where he's at. So here's what we're gonna do, guys. I want you guys to be active here in the chat. Okay. This is a rare opportunity. I actually never do Zoom calls for trading. Since I do basically like 20 hours a week of Go Live. So I don't actually ever really do this. So this is pretty cool. So this is your moment. Like this is a more intimate setting. You guys can drop your, whether you want to drop your own charts, you want to get some feedback, and everything like that. Like go ahead and use it. Like this is your moment. If you want to unmute yourself, we're about to run it like that. Like I want this to be very immersive, very engaging. I'm going to show you guys some things that allow me to do what I do effectively. Let me get some better light. My nice camera, I don't know what's going on, so I couldn't use the 4K quality. I like to ball out here with y'all with the quality. I think y'all deserve it, but today we're gonna do the normal webcam. But here we go, guys. So here's what I do. So if you guys don't know, indices are like I love indices, and not love like a material love. Like I have a passion. I have a burning love for indices, and I'll tell you guys why. Right? Here's the thing. I'm all about risk to reward, and I'm all about efficiency. And so I know a lot of people here, drop a 1 in the chat if you're currently a part-time or full-time employee. Drop a 1 in the chat if you're in that hustle or not, if you're in that grind. And I got so much respect for everybody here who's really building skill sets, recession-proof skill sets, depression-proof skill sets, while you're running, other plays, while you have other income streams coming your way. So shout out to you guys. Never let somebody talk down on you for having other avenues of income, that's a confused mind. Okay. Like you need cash flow to be a good trader. And even when you become highly skilled, even when you have, funded accounts, even when you're doing 6-7 figures, however, whatever it is that you're doing, trading alone should never just be your income either. Guys, I'll tell you what, I'm grateful for going full-time trading back in 2017. But I'll tell you what, if I didn't have enormous amounts of practice with emotional intelligence, I don't think most people would have survived the pressure of just living off of one income stream, and that being trading. Because what that means is you have to perform every single week, basically. And it's just not good. That peace of mind, like one of the most important things and what you want to value in your trading career is that peace of mind. Clarity and peace of outcome have so much power for you. It'll allow you to trade your best at your best when you don't have financial pressures to do so. Remember, and this is something that we overlook pretty often, trading is meant to multiply your money. It's not meant to be your money. It's meant to multiply what you have. And can you be a full-time trader and do nothing else and make money trading? Absolutely. But that does require more capital in order to have that kind of peace of mind. Because I'm giving you guys an example. I'm preparing you mentally for the journey. I'm placing you in your future, right? So I'm placing you right now. I want y'all to just understand what we're doing. Imagine you are only living off of trading. That's it. And you have, let's just say, 50K in the account, 20K in the account. I'll say 20K in the account. So if you don't make money that week, if you do lose that week, how would that make you feel? Because you still have to withdraw that week. Could that potentially evoke, revenge trading? Could that lead you to breaking your trading plan? It's possible. Let's say you have 2 weeks back to back and you have 2 losing weeks. So now you've had to withdraw for 2 weeks in a row from your overall balance. You're now sitting at like 18K, which is still okay. But how would you respond to those moments? But if you also have other income streams, and it could be, building a business. It could be, you have another business outside of this. It could be Airbnb income. It could be, whatever. You have a trucking, whatever. But the one thing I'm getting at is the only time I would say that someone should have and you only want to have a trading career is if you're like very, very, very well ahead. I'm talking no debt, like money in the bank. You're good for years if you lost everything. Because the idea and the way that you like really trade your best is when you're not tripping about money. You will trade at your highest level when you're not trading for money. When you're literally only focused on trading the plan and trading without errors. So I wanted to open with that because when you can do that and you have that mindset, everything becomes so simple. The only thing that matters is that trading plan. The only thing that matters is that risk management. Those are the only things. Like for me, a successful week is a week where I don't make a trading mistake. A trading mistake and a loss is very different. Losing trades, you can lose trades the whole week, but that could still be a very good week if you follow your plan. Because if you stay following your plan, it's probably going to lead you to some wins. So anyways, with all that being said, if you guys didn't know, every Sunday at 9 p.m. Eastern, I do a trading psychology session. And I can definitely say with evidence and proof that the people who are the most consistent on those sessions are the ones that I've seen get to that making, a full-time type of trading income. Shout out to some of you that are on this call right now. And just because you're making full-time income doesn't mean it has to be your only income. Common mistake. All right, common mistake. And the one thing that I'll tell you that helped me the most is I don't let people know where I'm at. We play this comparison game a lot. And when you let go of that, you could have $1 million in the bank. Nobody knows, guys. That's possible, guys. People don't have to know. And trust me, you're going to feel better. You're going to feel better when nobody's in your business and you're just doing your thing. Believe that. So let's get into it, guys. Let's dive a little deeper. I'm going to show you how I set my week up. All right, this is what I do. And for those of you that have, other things, and if, you're doing this and you're building at the same time, or you have, full-time, part-time income, or you run another business or whatever it is, my idea is to move effectively. So I trade indices, US 30, S&P 500, and NASDAQ, right? Those are the three. These are the babies, the go-tos. So we have this. If you were on today's session, could have sniped that cell right here. But anyways, besides the point, here's why I do this. Okay. I use indices because you can go on the 1 minute time frame, 5 minute time frames, and you can snipe entries. You can have quick in and out moments. And so at 9:30 a.m. Eastern time, this is when volatility really starts to hit indices. And so you can have what we call a 5-to-1 risk to reward. What that means is you're making 5 times more what you could lose. And some of those trades play out in minutes. We've had some play out in seconds. And so this to me is just efficient because I can trade from 9 to 11, 8:30 to 10:30, just a couple hours, and then I'm done. So this for me is really efficient. So if you have these time slots open, I highly, highly encourage you to take a look at indices because the concepts that we teach on Golive, they can be used on the smallest of time frames, and you can be really, really effective. And the risk to reward gets pretty crazy. So let's say, for example, and if you don't know what risk to reward is, I'm about to show you. So let's say we took a sell right here. And we wrote it down to where, let's say you just took a perfect trade and you brought it down to here. Actually, you got out a little earlier. This trade right here would have been from 12:35 around 3 o'clock. In 3 hours, you could have made 5 times more than what you risked. You know what I mean? And all it took was one action. You managed it, pulled back, continued, cool. Now your stop loss is in profit. You're following the structure. Dude, you're good to go. And it didn't take very long. So this is what I do. If you're able to trade New York session, you can more than definitely do this. Now, let's say you can't trade New York session. There's also indices on other sessions. So London session has what you call GER 30. This is Germany's indice. This is basically US 30 for Germany. Same principles apply. They move really, really, really similar. And you also have UK 100. So you guys can write those two down. And these are other indices that move. So if you want that kind of volatility, you guys can definitely take advantage of this. And you don't have to trade a lot. Less is more when it comes down to these things. But let's say that you're you know what, indices are just too fast for me right now. I want to build up to that. Or you're just more familiar with Forex. Here's how I approach the foreign exchange market. So what time zones are for those? If you're trading the London session indices, 1 a.m. to 3 a.m. are kind of like hotspots, 2 a.m. to 4 a.m. Eastern time. So it's up to you guys. I know some of you might be in Europe, so it's a little different. But cool. Let's say you just can't do that. Look, here's what I do. This is what I do. I go to forexfactory.com. Now, in forexfactory.com, this gives you kind of an outline for the week. So you go to calendar, and then you can choose the impact of the news events. So the red folders are the most volatile, the orange are medium, and there's yellow ones too. So I don't really use the orange ones either. I don't really care. I like the volatility. Now, don't be scared of volatility. Remember, these news events, right? Quote unquote, these news events, they're not, I'll put it this way, because in order for you guys to really understand this, like the vision, big picture, you have to understand this principle. Everything is orchestrated. And don't let this like hang out with me for a second, okay? All of this is orchestrated. So Tuesday, 8:30 a.m., USD news, a red folder's high impact, which is going to be, there's volatility going to come into the market. Whatever the outcome of this is basically irrelevant. Okay? Here's why. This whole thing is orchestrated already. So it's already all programmed. So the charts are like the matrix, but for financial markets. Forex, stocks, and your favorite cryptocurrencies are basically all orchestrated already. And this isn't conspiracy. Like this isn't theory. I'm not giving you guys any theory. I'm genuinely telling you how it works. These central banks are fined every year for massive corruption and manipulation. Like I'm talking about billion dollar fines, but the profits are so fat that it doesn't matter. So with that being said, all of these news events, and remember, what is the news, right? News always has a narrative. It always comes from someone or something, and it's here to give you some sort of information. It's here to form, right? Form your thoughts, your opinions. It's there to guide you to here, pay attention to this. So we pay attention to the timing of this. So 8:30 a.m. tomorrow, there's going to be dollar news. So, okay, cool. If I know there's going to be volatility with USD, then let me go check out the USD pairs, because that's what's going to create movement. And now the outcome of this news event is irrelevant, because all this is the excuse so that the market can move in ways that it's already programmed to move. So here, I'll show you guys. Central bank fines Forex. 5 banks fined $1.4 billion for Forex infractions. Antitrust fines 344 million. 5.8 billion. Everywhere. I'm talking about Barclays, RBS, HSBC, Credit Suisse, UBS, every bank. Like this is, and here's the funny thing is, this is nothing. It's a little slap on the wrist for them, because they're making so much money. If you can look at, and I'd have to find it, but you can actually look at the record of how many days banks actually close at a loss. And I think of like the 200 trading days, however many trading days, I think they lose 3 out of those days. And those are intentional losses. So all of this should start to make a little more sense. So with all that being said, when you look at the market, understand that the same patterns that are taught to you, then these are unavoidable patterns. And this is a good way to just get a good outline on the market. So like support, resistance, trend lines, concepts like that are taught everywhere, YouTube, everywhere. Like there's books on these patterns But let me ask you guys a question. Who moves the market? What moves the market? Patterns or money? How much money? If this is $1 trillion, right? Trillions of dollars that are moving every single day. What is moving the market? Do you think that your cute little 0.01 is moving the market? Do you think that 1 million traders, 1 million retail traders buying at support, do you think that's genuinely moving $1 trillion market? No. For EU to move 1 pip, it's like you literally need billions of dollars. And that's like for it to move for an instant, because there's got to be sellers on the other side of it too. So what creates movement? Money. No, but it seems like they know where I put my stop loss. Exactly. Because they created your mindset for where that stop loss should go. Remember that. They gave you the rules and then they break them against you. Think about it. They told you where to put your stop loss. They told you what patterns are supposed to work. So they made the rules. So with that being said, always approach the market with their intention. What's the narrative? So here's the example. This is a trade that I don't know what session it was, but there was some session. And I'll give you guys, here's the example. AUD USD with the market here. And I'll go into some actual charts. I know a lot of this is, because I know there's just new people, so I wanted to get you guys up to speed with how I look at the market. And if you have never heard any of these things that I'm talking about, and I'm kind of like blowing your mind right now, and you're like, wait a minute, everything I've been doing has been wrong this whole time. What the, like what is going on? Then it's okay. Just go watch our bootcamp here, bouncebacklaunch.com/bootcamp. And then you will definitely be enlightened following forward. So cool. In this bootcamp, you'll learn how institutions move the market, the mindset, risk management, psychology, all that good stuff. So anyways, what happens here? Everyone's taught support. Everyone's taught equal lows. Oh, look, double bottom, triple bottom, quadruple bottom, whatever. And it's taught that the more it hits this, the stronger it gets. That's what's taught. Okay. Well, oh no. Now it just cleared the lows. Now, most people, they live on the smaller time frames. So what happens next? What's also taught, okay, so your support just took a loss, but now it broke the low. So most people are taught what? Well, break and retest, right? Here, it's supposed to keep going down. That's what someone told me. Okay. But remember, what moves the market, guys? A pattern or whales, central banks, big money? A pattern doesn't move the market. Banks do. And why do they move it? They move it to get everyone's money. The reason they dropped the price down here is because if everyone was taught where to buy, which is at support, then where do you place your stop loss? If you're buying at support, where do you place your stop loss? Below the lows, right? Maybe it's below all of this. Maybe you're conservative, so it's below all of this. Tell me I'm wrong. Everyone right now, if you currently trade support and resistance, where would you put your stop loss? And it's okay if this is how you trade right now. That's totally fine. You put it below here. So the intention of this is to capture all of the money from the masses. Thank you for your money. And then what else has been taught? Well, it's a break and retest. So then people go, okay, well, the buy didn't work, so let me sell now. It's because the floor turns into a ceiling. How? I don't know, but somebody told me, so it's supposed to work. So then you sell, you place your stop loss here, maybe over here, maybe over here. And then what happens? Oh, oh no. Oh no. Oh no. There it goes. And then you're either took a loss or you're a no stop loss type of trader, and now you're really in some drawdown. Okay. So what has happened here, guys, is that right here, there is an intentional sell. Here's where institutions, they drop price on purpose. They literally sold, dropping price down. So when the market then recovers and goes in the intended direction, there's this sell open. So then what happens? The market's going to want to look to close this up because central banks don't lose. Understand that. Central banks don't lose. So they're going to come back for their money. Now, the good thing is that we've seen the market close up here. So we've seen it. Okay, this is pretty bullish now. Higher highs. All right, great. So the market will come back, close their sell positions, and then open up buys. And this is where you see the following happen. And also, when you see something like this, where market trends aggressively in one direction without, the market should be moving very efficiently, very healthy, back and forth and back and forth. When you don't see that, expect the market to come back to things like this. It's exactly why Bitcoin is where Bitcoin's at right now. No one wanted to believe it, but we've been calling it since November. So here comes the market. Okay. And then what happens? Slowly but surely, we're going to see it pull into this zone. Look at that. Guys, look at the way the market reacts to it. You see how it dropped aggressively? It was low, slow, mellow. As soon as it came into this zone, the sells, the money required to push the price down, that money was now recuperated. So like now, okay, there's no more sell open. They close that order. That means that they have money again. So they just put the money into the buy. And that's why you see this do it the way that it does. And you know what? Just to show you guys something, this was June 7th, around like midnight. Let's see what was going on. Let's see what was going on in the market. If there was a news event, June 7th, around 12:30. No way. What are the chances? Exactly when price got back to this zone, because here's where you saw institutions move the money the first time. What a coincidence that as soon as the market's back at this timing and there's an excuse for volatility, the banks close their sell and open their buy, and they crank the market up. So if you would have taken something like this, let's say you took a buy here, then this quick move, this is 4 times more than your risk. And you guys are trained to take trades like this. It's been taught all the time. And here's where you have equal highs. So so now guys, I know you used to get in, right? You would get into trades at equal highs, at equal lows, at resistance, at support. Now, instead of getting in at trades, when you see that, that's where you get out. So you would have seen something like this. You could have got out right here. Why? Because banks love these resistances and support. This is magnet. This is a magnet for them. Why? Because people sold. Oh, look, a double top, a little M. Let me go sell that. This is M for manipulation. Michael Weaver, who I think is on the call today, I remember him saying, he's like, look, it's easy. You just look for M&Ms, right? Manipulation, mitigation. Manipulation, right here, mitigation. All mitigation means is eliminating a loss, right? Cutting, it's like cutting your losses. So banks, they close out their potential loss, break even or profits, and then they just put all that money that was in the sell, they just put it into buys. And so off we went. And this happened in like an hour. So anyways, guys, that's just an example, just so you guys have a better understanding of how things work. And everything that I'm teaching you right now, like, it's just practice. Don't rush it. It's just practice. Trust me. So let's look at the market, right? I got a little bit of time here. Let's go look at like where we're at in the moment. And the reason that I'm looking at AUD USD, and what I'm going to do is, this is what I do. I just navigate through the USD pairs, because if tomorrow, right, we saw that tomorrow, June 14th, we have USD 8:30 a.m. All right, cool. I want to focus on what's moving. That's what's going to make me money. So, okay, well, for those of you that don't know what we're looking for where did banks leave their money? That's what's going on. Where did banks leave their money? Yo, Bitcoin's at 21,000. Damn. So what happens? Where's the money? That's all you gotta ask yourself. Where's the money? Think about like you're a mobster. So right now, if I look at where can we see a place where institutions maybe got into the market and took out the masses? Can we see that here? Market's been trending down pretty aggressively. Keeps going down and down and down. So do I really see a big movement that clears out a lot of liquidity? Now, what is liquidity? For those of you that don't know, liquidity is like equal lows, equal highs, where the masses get in and get out. I don't really see anything too clear for AUD USD, so I'm going to go and look for something that's like abundantly clear. And what you're going to also realize is that there's so many opportunities in the market, you never have to rush it. So here's one trade that I'm waiting for, which might not happen soon, but I'll give you guys a look here. So if you look at Euro USD, you can see that there's something that really stands out. And here you can see there's a big push up. You can tell by that wick over here. And this pushes up and it clears out where everyone was selling equal highs, resistance. Everyone was selling at these levels. So let's go down some time frames here. And when it comes down to using time frames, remember that higher time frames show you direction and lower time frames give you precision. So we can clearly see that the market has been dropping aggressively, right? Down, trending pretty hard down. So this is bearish. Now, what happened on the way down? Well, take a look at this. Remember, everything is intentional. There are no accidents. There are no coincidences. So here we had, and I'll show you again this way, it just looks, it's easier to see it live. So resistance, most people are looking at this and go, this has got to drop. Every time it's around here, it kind of tends to fall. So what the banks are going to do is they're going to build up retail money. Retail traders are the masses, like most people. So they're going to build that up. They're going to lure you in. Okay. They're going to lure you in. They're attracting you into the market. Oh, look at this equal highs. Double tops. Oh, I got to sell that, man. That's what Baby Pips told me. So when there's enough money, when there's enough retail money, that's when the whales come in. And we can go down another time frame. So you want to get more detail. You want to get more you want to see exactly how it happened. Here's a 15-minute. You can tell that here it dropped and then went up. Came down, chopped up a little bit. And then finally, right here, you see the market push up and then drop aggressively. And now this is June 9th, 8 a.m., 8:30. And then you see this. So look, here, price goes up. All of a sudden, everyone who was selling here, everyone that was selling here, everyone that was selling over here, they all just took losses. Okay. Well, also, remember, most people they trade breakouts. So they'll either put a buy stop here or they have a break and retest. So people like this too. Why? They don't even know. So there's a lot of money coming into the market, and then this happens. And it just keeps, oh, look at this. So it drops. Okay. So here clearly you saw institutions just clear all this money, and then look at all this imbalance. Look at all the money just working its way down. And here's the thing, when the market drops like this, in this way, this is not, fluid, right? This isn't, just moving nicely. This was just a drop. Just a big drop. And then all of a sudden it stops, right? Just like that, it just stops. Wow, look, there's been support before. Look at that, support. Oh, okay, it's over. Guys, it's over now. Everyone's fine. You can buy again. Why? Well, there's support here. What does that mean? I don't know. It was here before, and it's got to go up again. So enough money is built into this. And then look at that. It's just bouncing off of here. It's got to go up. Oh, no. And just like that, it drops 30 pips, blows past all of these stop losses. Oh, man. And here, oh, it got ahead of me, but then what happens? Look, well, it's making equal lows again. Support. It's bouncing off of here. So everyone's happy. They're like, okay, well, look, it just went down so much. It's got to go back up, right? So cool. Let me buy this up. It's got to go up again at some point. It just dropped. It can't keep dropping forever. Look at this. There's equal lows again. There's money here. Okay. Okay. It's going to be fine. Oh, no. So this is why you may be losing the way that you're losing. It's because you're just trading the rules that they gave you. It's not your fault. So there you have it again. You can't possibly break the lows again, right, guys? That'd be crazy. Oh, there it goes again. So when you see something like this happen, it's because there's enough buyers built up that the whole intention behind this is just to slaughter all of the buyers that are left in the game. So the question now is, okay, well, what do I do? I just showed you how not to lose. All right, I just showed you how not to lose, which is just as important as how to win, because capital preservation is just as valuable as capital creation. Because do you want to make money, or do you also want to keep money for a good time and a long time. You want to keep it, right? So what we have is, if we go back to where it all started, eventually we'll get back up here. This doesn't expire. So you see how there was a buy, this is what we call institutional buy, it drove price up, took out everyone's money, and then it dropped. So we got to come back and close out this buy. Got to come back here. So that's what we're waiting for now. We're just gonna wait, and it'll get back there eventually. Whenever it does, then we can take a sell in this zone. So I've seen a lot of resistance here before, a lot of liquidity. So I would take a sell somewhere in here. I like to take sells based off of whatever happened, wherever the resistance was before the big push. This is what we call liquidity capture. When the banks clear out everyone else, that's what we call liquidity capture, because now they have all the money that was built up right there. So I place my stop loss right above that, and I'll enter right where they used to be. And then I would take this down to wherever liquidity is. So this could potentially be a very good trade. So I know some of you are now asking yourself, well, if it's got to come back up to here, why wouldn't we buy? If it's got to come all the way back, why wouldn't we buy? We don't know when that's going to happen. This doesn't necessarily give us any clues that it's going to go up now. For example, you saw support here, and then it just kept going down. Same thing again and again and again. So we don't have, and we don't know yet. We need the information. Now, if we were to get something like this, where you have the equal lows, and then you see the liquidity capture where it clears out all the buyers, and then immediately you see the market recover, and then, you know, it kind of holds these highs, we're chilling up here, and then it comes back, and sure, we could see something like this. But we would need to see institution drive price down on purpose, then give us higher highs. This is when we would see, okay, cool, well, they left the sell open, so they'll probably come back, close that, and then buy it up again. Could that take us all the way here? It's possible. Or it's just a short buy and then it just keeps going down. That's also possible. So that's Euro USD. This might take a while to happen. I don't know if it's gonna, you know, we're probably not gonna see this happen for tomorrow, right? But now you're aware. But what you can do is, well, okay, well, this is where we're at now. Could something have happened over here that could guide us towards an entry? And so what I like to do is this replay tool, I'll go back to last time we were here and we just go look at the details. So over here, it looks like, okay, let's get a little more detail. So you have support, equal lows. Cool. So it looks like it dropped pretty hard, then came up. So this to me looks like this is where institutions came in, dropped price down. It took all these buyers out of the game. And then what they did was they actually ended up giving a support again, but this time this one played out. So now we go to the present. And what you see is, let me go, I'll go to the 4 hour. There's an institutional sell open and we haven't gotten to this area yet. So price is looking to get down here so that they can close this sell and then open up a buy. So you just might get a nice reaction from this zone. And look at that. Over here, you've seen equal lows before too. So, so yeah, guys, this is we could definitely see some buys in this zone, and then we'll definitely see some sells over here as well. So with Euro USD, this is something that I'm looking at for tomorrow. Obviously, the buy is much closer, so you could see something like that, and then I would place my stop loss under this wick here. Now, whenever you see something like that, Euro USD, what it does is it moves in correlation really well with GU. So could GU look similar? With that, turns out that GU is actually dropping before first. So if you look at this, you'll actually notice that it came into this zone once and you saw it actually rebounded and then pushed down further. So GU already played off of this structure once. So this one led, which means that EU has a better chance of doing this thing. So what I'll say is this, guys, in regards to entries for USD, I think Euro USD is kind of the one that I like the best out of everything. Don't know if it's going to happen now or if it's going to happen later. But out of everything that I see, I think Euro USD is going to be the move. Now, here's the last thing that I'll leave you guys with this, and then I'll have to wrap it up. Sometimes the news event doesn't get you into the trade. It creates the setup. So this is the first news event of the week. So what this could do is this could lead to the institutional move. This could lead into creating the big wick, the big movement in one direction before it goes in the opposite. And then this news event could set up a trade for Wednesday. This news event. So the news event will either trigger an entry or it'll set up an entry. Remember that. So if you don't get like anything, then it's fine. It'll probably, tomorrow we'll probably see it set us up for Wednesday's trading day. So there's always no rush with trading at all. So I know I didn't give you guys a lot of setups. I might be back next week or the week after that. But more than anything, I hope you guys got some value out of this. I mean, we'll be live tomorrow on Bounce Back Trading Indices, so you guys can take some live trade with us. But my final words are that keep practicing. Watch the course for sure if you can. Bouncebacklaunch.com/bootcamp. You guys will have everything you need there. And lastly, just make sure to go do this. Don't just watch. Go do it yourself. Like go mark up some charts. If you need some examples, go to my favorite sessions as well. So does a manipulated candlestick capping money have to be on? No, it's not one candle. It's you'll need different perspectives. Like, yeah, it's not. Here's the thing, guys. Remember, a candlestick is just it's like a lens on camera, different perspectives. But you guys will learn more of that in the course. But yeah, go and practice, go and do this, ask questions, send your charts out. You're gonna look like they're gonna be bad in the beginning. They're gonna be terrible, like atrocious. Someone's gonna tell you like, yo, your Fibonacci's upside down, right? Like you literally like this, that's not even a pair. Like, trust me, it's gonna happen. But you're gonna get value. You're gonna get feedback. That's gonna accelerate the process for you. So yeah, guys, I appreciate everyone for your time. Make sure you invite your people for the app call that's coming up next. I know I did. I got a couple people ready to go. So yeah, I appreciate you. I'm gonna give it back to Cruiser. He said like, yo, 30 minutes, and I definitely did more than that. But yo, thank you for the invite. Thanks for the collaboration. And yeah, stay tuned for John Guaman and Tim Slum about to run the play.
Appreciate you, bro. Yo, if y'all got some value from, that's a reciprocal question. We all got value from Mike. Drop some 7-7s in the chat for Mike. Appreciate you. I know that you went for an hour. You could have went for another hour. I was tuned in. I was listening, taking notes. And I appreciate you for the value as always. Guys, make sure you guys tune into Mike's live sessions. They're next level. They're amazing. And his next one is tomorrow. But with that being said, everybody have an amazing rest of your guys' night. And I'll talk to you guys all soon. I'll see you guys on the next one. Bye, guys.